it's odd for the market to move in straight lines, and this market's moved in a straight line. We've walked through all major resistance areas. We've come up to a level now in the low 2800s that might prove as resistance, but at some point stocks need to go sideways and consolidate these gains. Maybe a little pullback, maybe consolidation where the overall index goes down a little, goes up a little, but you'll have some sector rotation within the market, and that creates a lot of opportunity. So, yeah, we're still buyers, but I agree with Mr. Buffett. I think you've got to be patient in what you're doing.
Rick, I have to ask you about what's going on in treasuries as far as the trade talks are concerned, just because I keep thinking about how much of our debt that China owns, and they play a very big part. So what is the market for treasuries telling you right now, or has told you, or about what it's expecting as these trade talks maybe move forward towards a resolution?
It's very hard to garner much information on any of those very relevant topics just by looking at Treasury rates. As a matter of fact, after October, November, and November was the last leg of that 324 top where we reversed down so significantly, 60 basis points, that I think it sends more of a message that other central banks are keeping their sovereign rates low on the relative value trade, and on the other hand, just the global slowing notion fits into the treasuries, and then you try to divine how much is split between global and U.S. with regard to economic horsepower's effect, especially on the long end of interest rates. But when it comes to China, I think that the best place to look is probably on the equity side and on the foreign exchange side, especially knowing that the Chinese understand that if they keep their currency weak, that it helps their export economy. And if you've looked, we are now at about a 7-month low on the dollar versus the Chinese currency. And to me, that screams of being in sync with many of the headlines that we are hearing about how the talks are progressing, whether it's foreign exchange stability or, of course, all the IT issues. There is one area on the Treasury curve that might give us more information on China, and I think that's the complexion of the yield curve, and hopefully we'll see it steepen a little bit and see the long end wake up a little bit once that deal, if that deal, gets verified and we see some meat on the bone.
Mike, there's been some fears domestically in the U.S. about earnings not delivering the same type of earnings growth in the year ahead as we've had over the past year. Which sector in particular stands out as one that will indeed deliver solid earnings growth for the rest of the year?
It's kind of interesting, and I'm not so sure that I'm buying into the earnings being weaker. Yeah, earnings have been revised lower as Q1, as we went through Q4. Q1, we're actually looking for negative earnings growth. And for the full year, we're down to 4.7% growth at the consensus. But if you look at the median stock, you're looking at earnings growth at 10.2%. So I wouldn't get too caught up in that. Now, if you look at the sectors, all sectors outside of one had their earnings revised lower throughout the Q4 earnings season. And industrials were the only sector that saw their earnings moving higher. So I think that really stands out as an area that looks attractive. It's extended. It's gone up too much. So I'll be a buyer as it pulled back. Some other sectors that are out there that have some good, healthy earnings, healthcare, for instance. Earnings are expected to be up 5.7% versus 4.7% for the market. And it's actually seen its PE go up very little this year versus a 2-point move for the S&P on the PE. So I think that's a very attractive area if you look at it from a risk-reward perspective for a market that has gone straight up.